Recording in a double entry accounting scheme. Have a look on the left hand side of the screen and we will review the simple double entry system. Start of the reporting period, transactions evidenced by documents, recorded in the journals and stock cards. We have the end of the reporting period where we post the data to the general ledger, we prepare a trial balance, we prepare the reports, which are the cash flow statement, profit loss statement and balance sheet. That's the simple double entry accounting process. However, to learn double entry, we're going to do it this way. We're going to look at the transactions and we're going to record them straight into the ledger accounts in the general ledger. This is the best way to learn double entry, and when we have increased our skill level in recording in double entry ledger accounts, then we'll look at the system on the left hand side of the screen, which puts the information into the journals and then posts it to the general ledger, and then we prepare the trial balance. But initially we're going to learn our double entry by going straight from the transaction into the double entry ledger accounts. So here's the first transaction. The owner injects $30,000 into the business. Now when you look at a transaction like that, you have to be able to identify the ledger accounts that would be affected by the transaction. The owner injects $30,000 cash into the business. Because it's the owner, it must be capital, so one of the ledger accounts is capital, and because it's cash, we'll have the other ledger account, which is bank. So we have bank ledger account and the capital ledger account. So we apply the double entry rules. We put the date, and in the reference column we write the name of the other ledger account which is relevant, which is capital, and we put the value in the dollar column, $30,000. And then on the capital account we do the same sort of thing. We apply the double entry rules. An increase in capital is shown by a credit. We write the name of the other ledger account, which is bank, and we write the value, which is $30,000. We have just recorded a transaction into the ledger accounts. Notice that the bank account was a debit to show an increase, and the capital account was a credit to show an increase. Notice that the value of the debit, $30,000, equals the value of the credit, $30,000. You have to include the date, and in the reference column you include the name of the other ledger account which is affected by this transaction. In these examples we're going to exclude GST. Here is number 2. Purchased a computer for $4,000 cash. We're not going to worry about GST. If we buy a computer for cash, our cash will be reduced. And of course we have acquired a computer. So how do we record this into the ledger accounts? In the bank account we're going to go to the credit side to show a reduction in the asset. And we're going to write the name of the other ledger account, which is computer. And we're going to put the value in the dollar column. So I've just recorded a credit entry in the bank account to show a reduction in the asset. And then I'm going to go to the computer account and I'm going to record the date, the name of the other ledger account which is affected, and the value, $4,000. I've put a debit entry into the computer account because it's an asset and the value of the asset has increased. So debit computer equals the credit to bank. The value of the credit equals the value of the debit for that transaction. The bank was credited to reduce the value of the asset. The computer was debited to increase the value of the asset. The value of the debits equal the value of the credits. Next transaction, borrowed $6,000 from the ANZ Bank. So we identify the ledger accounts that would be affected, the bank account and the ANZ loan account. Notice that I've included the previous transactions there. So we've just borrowed some money from the bank. That means we have an increase in our cash assets. So we put the date in, we write ANZ loan, and the value is going to be $6,000. And then we go over to the loan account. It's a liability, so we're going to put that on the credit side of the account. We're going to write bank as a cross-reference, and the value is going to be $6,000. The debit entry, 6,000 equals the credit entry, 6,000. Come back and see the next video.